Hey guys, and welcome back to this post-market analysis for today, Thursday, September 23rd. Well, what moved the market? What happened? What was the main thing that moved the market today? Well, two things. First of all, everything is green, like, more than 1%. Dow Jones, Nasdaq, S&P, and even, overseas, everything was green. So it gives an indication that people bought the dip. They bought the dip because I think one of the main reasons behind the whole Evergrande situation was a little bit overdone. And it turns out that, it was right because today we had more reports, more info coming from China saying, well, they are now trying to control, as a matter of fact, China Evergrande will be most likely able to pay and meet the payments for the next coupon that was actually due today. So China is also working at making sure this will not spill over and bring down the entire economy of most of the economy. And that's good news, definitely. Now, on the other side of things, well, we had some economic indicators coming at the tail of what Jerome Powell said yesterday about what they're going to do when it comes to the monetary policy. We know that they're going to taper this year. So before the end of this year, they're going to start reducing the amount of money that they inject into the economy because they think the economy, they will be at a state where the economy it's strong enough to continue to grow on its own without having that stimulus coming from the Fed, the central bank. Now, when you look at those economic indicators today, we had the initial jobless claims. The market was expecting a decrease of 15,000 in number, but actually it came out that we had an increase of 16,000, meaning there are much more people that we anticipated, outside of a job. Well, one reason behind this may be the fact that we had Hurricane Ida, a couple of weeks ago, and disrupting people or the ability of people to go back to the workplace. Now, on the other side of things, we still have Delta variant, on some parts impacting, some businesses. The other indicator we had was the services PMI, the PMI composite, and the manufacturing PMI. So when it comes to manufacturing, you have the products and the services. And both of these numbers were actually below the forecast, meaning even though these are still close to what the street was expecting, to give them an indication that the economy is still strong and we are still on the path of having that growth for the economy moving forward in 2022, these numbers may be a little bit below the expectations, again, due to Delta variant impact and Hurricane Ida that happened here in the US a couple of weeks ago, still impacting some pockets of the markets and some pockets of the geography. So that being said, if these economic indicators show that there's still some confidence into growth happening and the economy still being strong as we move, towards next year, well, it means it's not going to be that much of a problem if the Fed reduces the stimulus. And that's why I believe we saw people more eager to take some more risk, and that we've seen for the last 2 days. So again, they bought the dip, and today the main stocks, the main sectors that were driving the markets on the upward direction was energy, financials. Again, because if the Fed is going to taper by the end of this year, then it means rates are going to increase. As a matter of fact, this is the performance of the financial sector on the markets today, 2.45%, which is not bad at all, And then on the energy side of things, when what we call the cyclicals, meaning if the economy is stronger, it means also that oil is getting a big part of this, especially the fact that, especially when you look at the supply crunch, which is actually undergoing in this market for oil. So 3.5% on the day, not bad at all. And for the last 5 days, just a little bit under 220, but it tells you when you look at the 5-year chart that there is still a lot of room to grow for the energy sector. When you compare it for the financials, for example, for the last 5 years, this has already grown so much, up 20%, while the energy sector is still down a little over 18%. So if you want to make some money, if you still want to invest and make double your money, because there are still some plays there out there where you can double and even triple your money, definitely look into energy. But we're going to make a standalone video on this alone. Airlines also were part of the big gainers today, especially American Airlines and CCL on the cruise side of things, gaining more than 3 and 4% respectively. So this tells us what? Well, the reopening trades might be a good time to enter now, because if the economy is sending signals that it's going to be strong, well, we have less down risk on the Fed taper because people are already ready or prepping for that to happen. So they're going to invest where they still have value and growth. So you will not see that in high tech, especially what we saw 2020 bringing to those names like the Apple, the Teslas and everything. Even though from a business standpoint, they're still going to show, strong earnings. But if you really want to make those real bucks, look into the reopening trades, cyclicals, energy, financials, manufacturing, transportation, airlines, recreation, etc., etc.